Oh man, so Bitcoin explodes up 2.3% on a day, where retail sales data show that inflation could continue to be sticky for longer. Crypto markets have decided we no longer care. Bitcoin breaking out from a nice pattern. I shared this pattern with you guys on my Twitter this morning. When I woke up, I shared this chart pattern. I said I'm watching this for those that are trading, and look at the breakout that ensued from that point. Beautiful trade. Congratulations to anybody who took this trade that generated up to 3.5% just on spot there. Beautiful trade there on the 5-minute chart. More importantly, that's another positive day we're trying to lock in here on Bitcoin, even though traditional markets are a little confused. So if you look on the right-hand side, this is the S&P. Yesterday, the S&P opened up negative, had a positive day, but overall the day was negative, right? Down 0.05% just slightly. Today, similar, opened up minus 0.5%, and it's trying to recover that gap down during the day here today. But look at Bitcoin. Yesterday on Bitcoin, up 1.9%. Today on Bitcoin, so far at the time of recording this video, up 2.4%. All of this with the backdrop of what was an insane retail sales report. Yes, retail sales jumped 3% versus the 1.9% expected, showing that the consumer, the US consumer, is spending like there's no tomorrow. They continue to be spending. They outpace the inflation. Okay, food service, drinking places, motor vehicles, parts dealers, furnitures, they are spending. And now what we're noticing is that the markets are less worried about inflation. They're still worried. I don't want you to think, oh, they're not worried. But they're less worried about inflation. They're more focused on recession. They don't want the recession to ensue. And if spending continues, companies will continue to deliver good earnings. And this is what's giving the markets the notion that Jerome Powell could be navigating a potential soft landing, and he's going to get a Nobel Peace Prize or something if he does. I mean, there's going to be statues of him in all sorts, because this is no mean feat. If he's able to get this inflation down over time and keep the economy spending, keep the labor market healthy, that is impressive, but it comes with its risks, and those risks are what the market is going to have to determine over the next few months. That is exactly why I said going into this year, Q1, Q2 are going to be crazy volatile. Now, let's jump back onto the Bitcoin chart, because Bitcoin is doing amazing work right now. Let's just bring back our chart structure and look at what we've managed to achieve. I'm just going to pop this down to the hourly. And on the hourly here, you saw we were in a descending triangle. We broke out to the upside of that, met our price target, then went in for another consolidation, which I just showed you on the 5-minute chart, and broke out. But look at the level we've now reached. We've reached back to where we dropped from the greater pattern, which is our ascending broadening triangle. Okay, very important level for us to reclaim. Look how long this line will support for. In fact, let's just extend that line without messing it up too much. And you can see we're running into that resistance. We've got to get above it and hold it as support. You need to see something like this on Bitcoin. Get above this level, hold it as support, and try work its way upwards from here. That's what we need to see next. Really good work from Bitcoin. It fell from this ascending broadening wedge. It held support from this pivot point here. We knew the support was here from this cluster. Okay, that's why I put this green line here. And you can see we did a double bottom formation. We tested it once, went back up, tested it twice, double bottom reversal, and boom, we're gone. If you don't know these patterns, ijaz.uk/TA, we cover this. Double bottom patterns are covered. It's one of the most basic reversal patterns. And speaking of reversal patterns, I'm going to show you another one, because this is where it gets exciting. What do you see here when we bring out this EMA ribbon? Well, you see three things. First, I want you to notice is this. What is this candle called here? This is called a doji candle, one of the most prominent versions of a candlestick, which indicate the potential of a reversal pattern. So Bitcoin, all this time on this daily chart, was hugely extended, right? Huge extension here from Bitcoin, and we were expecting a pullback. I wanted a pullback. It's healthy. I always kept saying, let's build some scaffolding. And so we came into our daily EMA ribbon. But you don't want to lose your daily EMA ribbon. You want the bulls to now step up. And this doji candle would have indicated that the momentum shifted away from the bears towards the bulls. We've since posted two very strong candles showing that we've got strength in the market. But now we need to continue. We need to get back above this level here, because that is where we got rejected. Right? That yellow line I've just added there, that is where we got rejected. We need to be able to go above that peak to create the higher high, because that way we've got higher lows and higher highs. Very important here on this daily that we hold this candle. Now, even more important, what have I been warning about here? What I've been warning about is this weekly chart, and it's terrified me. This movement here is a bear market rally. We're rallying into the EMA ribbon. The bears continue to own the trend, and the last 2 weeks have proven that, because the bears came out and said, nope, we're not letting you reclaim the EMA ribbon that easy. We've got a little bit of strength. But now the bulls have stepped back up again to show that there's a tug of war happening, and the bulls mean business, right? So the bulls have come in now, and this week has had a really good start. What I'm looking for here on this weekly candle when it closes in 4 days' time is, can we get a bullish engulfing candle? Again, another one of the candles we cover in the free TA course. A bullish engulfing candle gives you the indication that we can reverse this pattern and take over the momentum. And again, that would give us our higher low, and we can rotate up to the upside and continue our movement here on Bitcoin. It's a very nice move here on Bitcoin. Incidentally, you're seeing a slight climbing on the Bitcoin dominance, which is showing that Bitcoin's running faster than altcoins today. So you've got Ethereum moving up 1%. I've got a very important Ethereum video coming out later on. That's uploading now. Make sure you go watch it. It's everything you need to know about the Shanghai upgrade. What does it mean for the Ethereum price? Is it going to pump? Is it going to dump? I break it all down there. So Ethereum up only 1% to Bitcoin's 2.5%. Phantom even not moving as much as Bitcoin, although Phantom's looking pretty healthy here on the daily chart. You can see here on the daily chart, nice bounce from its EMA ribbon, just waiting for direction from Bitcoin. If Bitcoin can go break past the previous peak that I showed you, Phantom and the powerful altcoins will do the same. The altcoins which have proven they've got momentum. So Phantom up 1.7% here. If you switch it down to the 4-hourly, it's reclaimed control of its 4-hourly EMA ribbon as well. Let's also take a look at other movers in the market. You've got Matic's pretty flat here today. Cardano flat as well. Algorand up 2%, interestingly, bouncing from its EMA ribbon as well. Chaining up 0.8. Uniswap is flat. DOT is up 0.8. Near Protocol getting a little bit of a move here, 2.3% on Near Protocol. Render continues to rocket, right? Again, similar to Phantom, trying to break that previous peak there to create a higher high. Floki, have to give Floki a mention, gone absolutely insane, up 59% here after Elon Musk's tweets an image of his dog as the CEO of Twitter. Complete craziness. And again, guys, this will remind you that there's a little bit of froth in the market. So yes, I'm enjoying the markets. It's good to be in the markets. I wouldn't want to be out in the markets. I'm not a perma bear. That's not how I operate. I hold even in the trenches, and I continue to dollar cost average my positions. But you can see here, we are starting to get to that greed territory. You are starting to see people FOMOing into favor cryptos because they don't want to miss out on these moves, and I wouldn't want to miss out as well. But one thing I'm certainly not doing is I'm not FOMOing in. I'm buying on pullbacks. I mean, if we use Phantom as an example here, people were FOMOing in here at 65 cents. Make absolutely no sense. Buying into your EMA ribbon gets you entries around 41, 42, 43 cents. And now already you're up on those, sitting at 53 cents. That is the game you want to be playing, with more potential upside here as it breaks its previous peak. That is the game you want to be playing, not chasing the green candles and FOMOing in. Let's also check in here on the dollar index. And this is exactly what I mean by this decoupling that is going on. It's pretty odd, and it takes a little bit of thinking to understand. But Bitcoin historically is inversely correlated to the dollar index. You guys have seen that pattern. We've monitored it, we've charted it, we understand it. So technically you need dollar index to be red in order for Bitcoin to have a positive day. But if you look today, dollar index is surging up 0.7% here today, but Bitcoin is still moving up 2.5%. And this is reminding us that there's more to play here, and people are deciding from a fundamental perspective that they just want to load up now. They just want to be in cryptocurrencies, and they don't want to be a crypto bear from here on in. In other news, if you're wondering how white collar crime is treated in the US, Sam Bankman-Fried is chilling, watching the NFL and playoffs on a VPN. Yes, guys, you guys know we've got a VPN offered, links in the description to NordVPN. They're offering 60-70% off of their subscriptions, couple of bucks a month. Make sure you're on a VPN, guys. But Sam Bankman-Fried has been caught using VPN, which he's not supposed to on his bail conditions, but they're probably going to let him off. But yeah, this is how billion-dollar frauds are treated, and yet somebody could be doing something completely innocently and treated like absolute trash if it's a blue-collar crime. But there you go, that's how the world works. Fed rate monitor tool, and this position hasn't changed too much. If anything, it's actually improved. So yesterday, you'll remember we covered off after the CPI read that this had got as high as 15%. Yeah, 15% of the market actually priced in 50 basis points. That's notched down a little bit. It's calmed back down, and now well over 90% of the market here is pricing in just 25 basis points for the next meeting. And again, 74% are pricing in another 25 basis points at the next meeting after that in May. And look, the retail sales data give you a little bit of concern, right? If the retail figures are this strong, if the labor market is really strong like we're seeing, if CPI is still strong like we saw yesterday, then maybe Jerome Powell is going to have to hike for longer and keep rates higher than he thought for longer as well. But markets seem to be shrugging this off. As long as earnings grows and companies are doing well and people are spending and we don't feel like we're in a recession, that is where markets are starting to try shrug this off. And it's very interesting to see crypto trying to decouple and just move. People are ultimately making the value judgment that they want to participate in this market. They do not want to be sitting on the sidelines when broader markets are showing signs of improvement. I mean, it may not feel like it. Yes, there are still things to overcome. Like I said, the CPI figure is still not the best figure. We're not at 2%, right? The labor market is still quite tight. I understand. Unemployment's still at the levels from 1969. These things all need to improve. Russia-Ukraine still continues to rage on. But we're still in a far better situation than we were last year. Last year was very, very difficult. Markets were uncertain about the roadmap. At least the market, to a certain degree, can price in what they expect to see this year. And that is why we're starting to see a little bit more buoyancy in these markets. Let me know how you playing this markets, guys. Are you trading? Are you DCAing? Are you in the markets? Are you waiting for a further dip? One thing is for sure, volatility was promised in 2023, and we're getting that. Hope you guys enjoyed this video. Don't forget to smash up the likes. Don't forget to subscribe. Check out this video here, and I'll see you in the next one.